Over the last quarter, our global markets were up about 3%, but it was really a tale of two regions, if you want to call it that. The US was up by 7%, but at the other end of the spectrum, you had emerging markets down 2%. So there's a really large spread between the outcomes for the different regions. The other thing that characterised the market over the last quarter was rate hikes. So the Fed has been talking about rate hikes for a while, but the market's starting to believe there's going to be a lot more of them in 2019. So you saw 10-year yields push up, and that flowed through to US dollars, which also ultimately affected, I think, emerging markets over the quarter. Look, during the most recent quarter, Morphic, I think, would be characterised as having a challenging quarter. As you're aware, we focus on Asian stocks, and Asia and EM underperformed. We don't have much exposure to the US. In particular, we quite liked India, and Indian banks in particular had a challenging period. We were along a company called Indian Bank, and what the Indian government is doing there has set off a forced merger between some of the good banks and some of the bad banks, forcing the good banks to take on the bad banks. We were long one of the good banks, thinking that they would do well out of credit growth. Unfortunately, this fear of all the good banks being saddled with bad banks has weighed down on the stocks in particular. Look, how we're positioned now is, one of the stocks that did very well last quarter was a company called SCI, Service Corp International. It's listed in the US. It's the US's largest listed funeral business. In a world of uncertainty, death is a fairly certain outcome, so the market liked that. We'd bought some of that after last quarter where the stock hadn't rallied. It's gone up 20 or 30% in the last quarter, so that's something that we like. If we take a step back at the whole overall market outlook, we think you've got these competing forces taking place here. Real growth and real GDP looks okay, particularly in the US. At the same time, interest rates are going up. So you've got these two forces fighting each other. When real growth is good, generally equities do okay, but higher interest rates make it a headwind. So overall, we are somewhat bullish, but we temper that bullishness with the risk to interest rates. Yeah, during the quarter, one good thing for the business in particular is, as you're aware, we're an ESG or ethically focused fund. One of our newest funds, the European Hedge Fund, has been nominated for the most innovative new product, as well as our other two funds have been nominated in the Asia Hedge Awards for best performing funds in Asia. So it's good to know that there's a lot of interest out there inside ESG and ethical investing at the moment.